Yes, hello. Yes, hope you guys are doing well. So we're starting. We're starting. So let's just give the guys who are coming some few minutes as they join us. But we're starting now, and we're going to break down the charts. We'll look at some of the possible trading signals we have for this week. Yeah. So, so this week has actually been a little bit slow, and the market is just preparing itself for possibly NFP, which is non-farm payrolls, and it's going to be tomorrow. So it's from here that we are having. You see that all those consolidations, it's brewing up for tomorrow, and then from tomorrow we're going to have those big moves. Yeah. Okay. So it's going to be good today. We're going to have some great things to learn. So other members are still joining. We'll give them some time. So I'm looking, what you see on my screen here is actually gold. And we've been looking at gold. There is a particular area in which I would like to trade gold from. So from that area, that is where I want to get some trading opportunities. So I'm going to rub off everything so that we can start afresh. Yeah. So this week I've actually been focusing on the JPYs. Not this week. I think from last month, November, the JPYs have been giving us good structure, and I've been focusing on them. And we've actually managed to get some trades on JPYs, and we're swinging JPYs possibly for long term into 2025. Yeah. And then, of course, tomorrow being an FP, non-farm payroll, so we have to look at some dollar pairs and see how the dollar is going to perform. How the dollar is going to perform from tomorrow. And we all know that whatever happens to the dollar tends to affect the other pairs, and there is volume. Okay. But I think it will be better to build up from JPY, especially the swings that we have, because we have some trade pairs we are actually swinging, like I had said, long term. So if you look at my screen here, you will realize how I arrange my charts or my pairs. I usually put the similar pairs. I group them into one place and then the other ones here. So I could have like the JPYs in one place, or when they're following each other. And then from there, I can go to maybe the Swiss. From the Swiss, I can go to the card. From the card to the dollar. There's a reason for that. It's just good and helps you in being organized. And then you get to determine which currency is actually stronger and which one is weak, so that you can take advantage of them. Okay. So let me just start with JPY. So last month, middle of last month, we did some analysis on JPY. So if you're on the Tamam Telegram group, you will also see that we share. There's a free weekly outlook that that I drop every week, especially on. This was 2 weeks ago, which is last month. I talked about JPY swing sector. Yes. So on Telegram and then also on my Instagram. So if you can just look at the Instagram stories, and it's not like a gamble in the dark. So this is USD JPY, and then we also had GBP JPY. So we're into more than 5,000, more than 2,000 pips now, and then CHF JPY. So basically all the the JPY pairs. Okay, so let me just stop from there for now. So basically all the JPY pairs. So the reason for that is the total risk on the JPY pairs is about it's about 4%. Of course, I'm not risking the whole account, but then I had to like subdivide it and also enter all the JPY pairs. That is why you see that. Okay, so let me just show you the pairs. This is the Telegram group where I share free stuff. Like I said, 90% of my trades are all open source. So usually I share all my free content there. And then from there, that is where we get to trade. Okay, so the signals are usually sent. Okay, this was 18th November. So from on 18th November, that's when we shared the JPY swing secrets. And then when, of course, when you enter the trades, they don't. These were swing positions. They couldn't just go into profits. So we had a bit of drawdown, and then from the drawdown we went into profits, and then we also actually had another trade which we took, which was USD CAD, and then it ended up being a break-even trade. But then, yeah, you can actually find great stuff there. So, and then the following weeks or days, we had 27th of November, we were in blues, and then we were holding. This is it, we were holding. These are the pairs. I sent them in the group. Okay, like that. And then this was now on Sunday, which was 3 days ago. That is when we had said part two. So I want to build up from the part two and then also catch up with this gold trade that I'm looking to trade, especially for tomorrow's NFP and then GBP, USD. I'll break down this. Okay, so let me just build up from the JPYs. So let me go to GBP, JPY, and I start with it because it is what people like. People like to use trade GBP, JPY amongst the JPY trades. Now, if you're new and if you haven't followed the way I've been trading, like understand exactly how I trade, there is nothing complicated. I just follow very basic market principles, and those principles are: you want to be able to buy low, and then you want to be able to sell high. Just basic market principle. And it is important for you to adopt this idea because it will save you from this concept of people associating a trending trading concept with the truth. Somebody says that just because ICT and smart money concepts are the trending one, they are the only ways in which people can make money. But that is usually a lesser information uh, because what you need to understand is that trends are not truth. Trends are just there for that and then it will go. Because if you look at the history of trading, is that people were trading with indicators. People were actually trading with, they were plotting their own charts, then they went into indicator based trading. And then from indicator, people went into price action, pure price action, where they were using support, resistance, demand, supply. And then from there, from around 2018 and 17, that's when smart money took over. And then the whole thing now, it looks like is the truth. And other trading concepts. At the end of it all, what we need is the money. Okay. So you can still go and watch the JPY pair. The JPY Swing Secret Part 2. You can watch them here. This was uploaded like 3 days ago. Okay. And then now, let me just break down GBP, JPY. And what I usually do, I swing and then I also scalp. But it is the same principle that is being reflected. So whatever you can do, you can swing. It's the same concept because the market is in fraction. If you can swing, you can also scalp. So there's no really big deal about that. It's the same concept. So what I usually do with the swings, there are just two things I want to share with you. One of them is what I call like, I just mark my highs and I also mark my lows, and then I mark what I call like the price difference. These are the three concepts I employ in my trading. And then once I have marked these at my highs, at this key level, that is where I look for patterns. And those patterns are those things which repeat themselves over time. If you look carefully, you realize that the market actually, the market repeats itself And I had actually tweeted this, that the market is more consistent in showing the patterns that move it upwards and downwards than the traders that trade the market. The reason for that is that sometimes when you've blown your account or you're not feeling good, you're sick, you don't show up in the market. So when you're busy with some other things, you don't show up, but the market keeps on moving. So the market is more consistent than the trader that trades the market, because the trader can not be available, but the market will always be there. So there are certain patterns that the market keeps on showing, and those patterns, they keep on repeating themselves without stopping. And those are the ones I take advantage of, and not just anywhere. I take advantage of those patterns from my highs or my lows or price difference areas. And by price difference here, I just mean the difference between a high and a low. There is usually a difference between a high and a low, and that is where the market breaks. So these are the concepts. And then once I have established this, I just look for the pattern, and then I enter the trade from based on the patterns that repeat themselves, and that is it. Okay. So going on to this, so I can now switch to my highest time frame possible. I usually look at the yearly time frame. So I'm sorry if you don't look at that, and there is no problem. You don't need to get worried. You can actually concentrate on the monthly. There is no problem. The reason why I look for the yearly is that sometimes I can end up swinging my trade for as much as I can. So if you have been following me on my socials, you realize that some trades will swing, and then we continue to do the swinging even for a long period of time. I think the biggest trade I've ever swung was about 8 months. I think for those who follow, you will know exactly what I'm talking about. Okay. So anyway, let me break down my DJ like I had promised. So the first thing, like I said, you mark highs, lows, price difference. So when you look at the charts here, where are the lows and where are the highs? So obviously you will see this is the low, and that is where I mark. Okay. And at lows, that is where I look for buying opportunities. Then the next thing is to also mark highs. What high is high here? Okay. And then from there, we also have another high here, this one. Okay. Now, I cannot consider this as a high based on the yearly time frame because we have not yet closed. The year has not yet closed. We have about 26 days for the closure. So once this closes, then this becomes the high. But now that it has not closed, we don't do that. So once I've marked the obvious nearby highs and lows, I can now go to the next concept, which is the price difference. And the price difference is where we have a strong candle break. Okay, like we were here, you look at this strong candle break here, it broke above this high and then this. So normally I would mark this as my price difference. Okay, I've explained it in a video on the YouTube. You just need to come and then you will see trading concepts, price difference, and stuff like that. You will see it. You will see it on my YouTube. I've broken it down, price difference on EuroCAD. So you watch that video, you can actually be able to understand how exactly what I mean by price difference. So I'm just going to mark it like this, and then we had another strong candle break, which is this. So this also becomes the price difference. So once I have this, then I'm actually done based on here. Now I cannot consider this as a price difference on this time frame because the candle has not yet closed. What I do can come to a lower time frame when I cannot see more. So that will be the monthly, which many people now enjoy. So this is the monthly candle. So when I come to the monthly, you can clearly tell here how this high of ours is actually being respected, and that is where the market turned from. And that is where we actually got the trade. Okay, and then from here you can see there is another high here on the monthly. So I can mark this because the monthly candle has closed here. Okay, and then we see a strong push to the downside to give us these wicks. Okay, but what you need to understand here, there is this strong candle here broke this low here, so that becomes our next price difference area. Okay, so now once I have this on the monthly, I know that this was before this happened. So this is an area of trading. This can be an area of trading because, like I'd said, I mark high, lows, high, and then price difference. And then at price difference or at lows and highs, that is where I look for my patterns. So this area is an area of price difference, is an area of a low, of a high. So that's where I look for price difference. Around here, my patterns. So from here, I can now know that the market has impulsed to the downside. Then this is a bigger correction into the price difference area, and then possibly another impulse to the downside. So when I come to the weekly, so if you look at the weekly candle here, this week we are in, we've broken below this. So this is another price difference area. This one I've just marked. So that is an area in which if the market pulls back into this region here, I'll look for patterns to take the trade to the downside. But let me explain this entry here, why we were able to enter this trade here. It's actually here on my on Instagram. So this is UJ. Let me come to the next one, GJ. So GJ, the entry was around there. So, and that is the entry I would like to explain. Okay, so we had an entry around here. Okay, so this is where the next entry could be. Possible next entry could actually be here. Okay, but this is an area of reaction that you also need to know that the market will react from, and that is why we had this reaction, because that is a price difference. But from a bigger picture, you can see what I mean. This is an impulse, and then to the downside, this is a bigger correction, and then another impulse to complete this here. Okay, so now I can come to the daily, and then I begin to look for trading opportunities and patterns around here. So, and this is where around this area here, the whole of this was our zone. You can see from here, if you trade demand and supply, you realize that this is an area of supply, which also corresponds to your highs, your yearly high. This high we had marked, which is also our resistance area, supply area, or what you will call your order block. And by supply, I mean by if you have a series of one-sided candles, and then you have opposite candles in one-sided candles. Here we have bearish, and then we have a bullish candle. That is your supply, and that is an area where the market would actually react from. And then from here, I begin to also look for patterns. And these patterns that I look for from around here, they include head and shoulders, double tops, what you call your order block or engulfing candles. So we had this here. So that will be another area where we had an entry, but then we were able to get the entry on this after the break of this. So the moment I see a break here inside the zone, so what I basically do in simple terms is I try to look for like a double, if there is a resistance, then a resistance has to be formed on a lower time frame on a bigger resistance, or a support, double resistance, double patterns, and that has to be happening around highs. So this is basically why we were able to take the GBP trade. And then from there, of course, if you come to the H4, you could actually see clearly the entry was around here. And then where am I actually planning to swing it? I'm planning to swing it all the way up to here, because this has to be completed. This one has to be completed. And the reason is, this is a bigger impulse, a bigger correction, and then the market completes this. The market attempted to complete it here, but then it could not complete it. It just pulled down to form a lower low, and then here. So this is why I'm saying I could swing it all the way up to here. And then if we had our entry around here, so that is about 1,000, around 1,700 pips. Now, depending on the lot size you have used to open the trade, you could see that. So even if you open a very small lot size and you're patient with the swing, you let it play, you could make something. And then now for possible re-entry, if you have missed here, so this is another area in which we could actually trade from. This area which I've marked as our price difference, and the market is seeming to be pulling back into this. But what would I want to do for me to trade here? I would want patterns to be formed around this region. And what patterns are those? Things to do with double tops, head and shoulders. Like if you see this is a bars pattern. So this is one of the things I use. You just come, you find it around here, bars pattern, and then you click on it and you can copy a pattern and then you can drag it there. So these are some of the patterns I would like to see here for me to trade. I'm not just going to jump into a trade here. I will wait for patterns. Double top, head and shoulders, those will be the ideal patterns. Things like this. Okay. So things like this, these are the things I'll be looking for around here, or something like this. A double top, a head and shoulder, something. So these are the things I will be looking. Once I see them here, then I can have an entry. If I don't see them, then I don't enter. So it's as simple as that. So there is no time for me to go and analyze the other JPY pairs, but just know that you can use the same knowledge, mark the highs, mark the lows, and then you can be able to analyze them. So I can go to maybe another pair which I had shared today. So since we have NFP and we're going to be majorly focusing on the dollar, so it is important for us to look at some of the dollar pairs. So for now, I only have JPYs that I'm swinging. I don't have any other pairs. Okay, that have publicly disclosed. So there is no, it doesn't profit anyone if I talked about some of the pairs I'm swinging and I had not shared them publicly or on my YouTube channel. How will that benefit you? So, so the next thing I would want to look at now is let's just switch to the dollar so that we can save time. And then you can maybe ask some questions. Okay. But just for clarity, we are swinging these JPYs. So if you come to the Instagram, you just look for throne or you see a chook. So we are swinging them long term. Okay, no, I have stop losses. I know where they are. I've taken partial profits. So you need to learn to manage your trades and then you can let the rest, you swing them and let as they play out. Okay, so let's just cross to dollar pairs since we have to trade NFP and then possibly I can give you my NFP outlook. So I think for the purpose of time, I can pick $2 pairs, and that would be maybe GBP USD and then maybe gold. Okay, so maybe let me start with GBP USD because I've actually shared it today. If you come to YouTube and you look at the videos, I've broken it down in details in just under I just sent it like now you know these things are scheduled and automatic, so when the time comes the video will be posted automatically. So just this is just as we were talking now, I actually shared it here so you can check it out, or better still you can check it out on TikTok, also share it there. Okay, yeah, so GU is here, you can check it out, but let me break it down and then I can go into another pair. So GBP USD, so let me wrap everything off and then I break it down. So I usually go to my highest time frame possible, which is the yearly. So I'm sorry if you're not used to the concept of the yearly, but maybe you could give it a try. Okay, so on the yearly, let's mark our lows, our highs, and price difference. So we definitely have these as our lows, these ones here. So that is our potential support. And if we were to take a trade from here, we look for patterns here. In that case, since this is a support and is a that the lows we'll be looking for like possible double bottom, double tops, inverted head and shoulders, things to do with that. So once we've marked that, if you look at this candle here, this is a strong candle that has broken many lows. So this is what we call our price difference. And then our price difference point is here, there on the yearly. So meaning this is an impulse, this is a bigger correction, and then possibly another impulse to the downside. Meaning this is an area where we can look for patterns, things like resistance, things to do with head and shoulders, things to do with double tops, or what you call your order block bearish engulfing, and then we can trade from here. So this is an area of trading. And then from here, Even if I don't mark these other highs here, I've already gotten what I want, which is here. So meaning an area of trading is now from here to this. So, but just to be more precise, I can continue to mark these lows also. You will notice I am not minding so much about these other lows on the left side. So I'm minding about what is near. Okay. Now, this candle, which is in the week, has not yet closed as a yearly candle. We still have about 26 days for this to close, so we cannot mark its high and its low. The goal is to have the markings from a candle which has closed. So meaning from here, I can go to the next time frame, which is will be my monthly. So on the monthly, you can clearly tell here our price difference is also corresponding to supply. An area of supply here, this area here, like I had explained earlier on, when you have a series of one-sided candle coming down and then you have opposite candle, that becomes your supply. When price pulls back into those regions, there is a reaction. But notice the supply area corresponds to the price difference area. It also corresponds to what guys call the order block and stuff like that. So at the end of it all, people are trading the same thing with different languages. But what is more important is the money. Anyway, so let's mark this. So we have strong candle break, price difference also here. This becomes the next support. And then we also have price difference candle here. That is where the market reacted from. And then we have another price difference candle here, which is the area we are actually observing for this month. So this is what I'm actually observing for this month. And remember, we have a week here, and weeks tend to be filled. So I can mark the low of this week as my potential nearest support and where I would look to trade from. Okay, so once I have that, I can switch to a lower time frame. We just make it. So the next lower time frame I would come to would be the one near the monthly, which is the weekly. And the reason for that is because I cannot see more highs and lows or price difference that I haven't marked. So if I want to see more, I go lower to a lower time frame. Okay, so then from there I come to the weekly. So on the weekly, we can clearly see how it looks like. So we want to trade now around that area. We want to trade at this area here during tomorrow's NFP. If the market manages to pull back into this, that is where I'll look for trading opportunities. So the weekly here is looking also vague. You don't have much information, but of course, this is where I would love to trade from when the market reaches here. Now, I'm not just going to have a sell limit and then the market activates it and then I'm in a trade boom. No, I will wait for patterns. Okay. And then maybe if I just switch to the 4 hourly, just to save time, this is what I will be looking out for patterns. So this is an area where I will look for patterns. And again, what patterns am I going to be looking at? Things to do with a head and shoulder, so that the market can show me exactly where it wants to go. I just want you to explain something brief here about that. If you look at, trading is related to everything else. Actually, the word is everything is connected. I'm sorry, I'm not going to sound like some spiritual guru stuff, but it's just things are connected. And it is from those connections where we can derive meanings and easier understanding. So I'm going to use some aerodynamic principles. If you try to dig a little bit into aeroplanes and how they function, you realize they have certain principles. We have aerodynamic principles. Yeah. So I was saying we have aerodynamic principles that we can actually relate into trading, and these are things to do with flight, lift, and then thrust. So if you look at for if a plane has to leave the ground and take off, it has to function under the umbrella of the aerodynamic principle of lift, thrust, this and this on there. So you have to also picture the same thing with trading. Like if the market is to move higher from a lower point, and then it has to clear lows. You picture like if the plane is to set off, it makes that noise. In order to produce the lift, it needs speed, need that noise, and then it needs some thrust, and then finally it can fly. So those principles, you picture them also in trading. For the market to go up, it has to first clear some lows. It has to give you like support and stuff like that. So that's some same principle. That is whereby when we have support or we have a low, you just don't want to jump into a trade. You want to wait for the the same aerodynamic principles of lift, thrust, speed to take place, and then the plane takes off and the market takes off. So that can actually help you for buys. That's why at any low like this now, let's say you have a low here, you can see this low, but then the market had to first come weak lower before it could go back up. Okay. The same thing here. At any lows, you just mark. We had these lows here. If you're working with these lows here, you see what first played here and then it went up. So that's what the market does all the time. So in the same thing, you also picture gravitational forces like the law of gravity. We know that the law of gravity is acting constantly, and therefore, if any object leaves the ground, it is automatically acted upon by the law of gravity. So you have to also picture that if the market has transcended the aerodynamic principle of lift, and it is up the ground. So the next thing that is going to happen is the gravity. So it has to come down. So you picture, you play around with some of these principles, some of these scientific principles, some of these everyday life principle of buying high, buying low and selling high. And then you translate them and you use them to be able to understand the market because everything is connected. Okay, so and everything is repetitive. So that's have to trade in case the market pulls back into this price difference area on GBP USD. So that is what I will definitely that's what I will definitely do, and that's what I will be waiting for in NFP. So I think I can go into another pair, and that will be a gold. But if you have any questions, you can always feel free to text it in the comment section. You can leave it down there, and then I can attend to it. Okay. So let me go to gold. And then I try to break it down. Now, I prefer this data feeds for gold than the other data feeds. Okay, so let me use these data feeds. This is forex.com. So I'm going to use forex.com's feeds. Now let me use this other one here, FXCM. Let me use this. Okay, this one here. This is the data feed I want to use. Okay, so let me, I've actually sent a video in the group on how I'm actually expecting gold out. This is GU, the GU which I've just broken down, it is here. So the gold is here. Okay, so you can check it out in the group later. But let me just come to the monthly, okay? Just to save us time. I could come to the yearly, but we don't have much time. Okay, so last month was bearish and has left us with a week. And we all know that weeks will eventually be filled. So we can mark that. This is a price difference because there is a low here and then the market broke strongly to form these fresh new highs. Okay, and then there's this week which is supposed to be filled eventually. So from here we can come to the weekly, and then the weekly I was looking at this. So if you look at, there's a high and then there's a low here, which is a week, but there's a price difference here, which is here. So I can do it like that with one, like a single one, but then there's another one here, so I can just cover this. Then this becomes a zone. So before I can think about these other highs here, if price is pulling back up, it will first have to break this. So from here, I don't have any much more information apart from waiting for possible this to go back up from here. But then now the market is in the middle here, so we don't have to wait until it comes here before we can look for trading opportunities, because we could get one here. Then I can come to the daily. So on the daily, it's looking good. So you can clearly see here, from this zone here, we had a strong impulse to the downside to give us this low here, a fresh low. And then from here, we have the difference between this low and then this high is actually here on the daily where the market broke off from. And that is the area in which I was actually looking for trading opportunity, like I'd shared in the group. This is where I will look for trading opportunities. And then since I cannot see any more price difference, I can go to a lower time frame. The reason why I don't want to mark this as a price difference on the daily here yet is because we still have about 4 hours and 18 minutes for the daily candle to close. But if the daily candle closes bearish like this is an area I will be looking for trading opportunities. But it has not yet closed bearish like that, so there is no need to mark it yet. But we could mark it on a lower time frame. Okay, you just need to find a way of playing around. So we could mark it on a lower time frame. Then I can come to the 4 hourly. So on the 4 hourly, we could actually mark it now, but we still have 1 hour and 18 minutes for the 4 hourly candle to close. Okay. So if this is like that, that means why is the market coming down from here instead of reaching these other highs here? Then you realize that this is also like a price difference if you just mark the whole of this. So this is the reason why you have to be dynamic now, because we have a strong break here. So you cover this as the whole zone, and then from here the market comes down. We had another strong break here. Now it can explain why the market could not reach here on time. So it looks like we could actually come and just complete this move without necessarily reaching up here. So if that happens, then right now I'm working with this price difference area here. And then once this has closed, then I can begin to work with this. Meaning if it closes like that from tomorrow, I will be looking for trading opportunities around here. And from here, I will be looking for patterns. And this is where you are going to avoid losses. So when I come usually to a lower time frame and I want to trade, I am not just going to put a pending order here because this is an area where the market could return, because sometimes the market will just pass through it. So what I do, I wait for pattern confirmations around this area. So this is because if the market does not give me a pattern here, it could just go up and then give me a pattern up here. So where I will see a pattern around this region, that is where I will have the trading opportunities. But I'm not just going to trade because that is an area where the market could return. So it's like something double authentication. So the market has to authenticate itself, because it's based on the principle that the patterns that the market give, they are more reliable and repetitive than the trader that trades it. So if a double top makes the market to go down, or a double bottom, or any other pattern you're familiar with, if you suspect an area where the market could reverse from, you wait for pattern formation, then that is where you take it. Yeah, so that's what I have on gold, and then this is actually what I have for you today. If you have any questions, you can always feel free. And then we always share trades on a weekly basis. You will also see Throne analysis weekly recap. So you let me know if you have any questions. I don't know whether somebody has left a question in the live chat or not. I'm not sure. You can always let me know if you have any questions. Okay, so we don't have, I think we can call it a night. Thank you very much for attending. Have a good night and good luck trading NFP tomorrow.